JJ, that being said, though, Meta's run has outpaced all of its Mag 7 counterparts. So what does this signal about the investor appetite when it comes to tech? Obviously, we're still in a very concentrated market. Valuations are stretched. But does this signal maybe perhaps some buying opportunity?
Well, Alexander, I think it absolutely does. And the other part about it is, the AI game continues. I think it's still, as we're starting to see more and more in the last earnings conference calls, it's now okay, you've spent this incredible money. And besides helping middle schoolers cheat on their papers and an incredible search engine, what are we really getting done? And I think we're all incredibly excited about what can actually come from this, particularly not just in the technology sector, but in the medical technology sector also. I think maybe the most exciting place that is eventually truly transformed by AI. But that all said, it's been billions of dollars spent with returns that I think everyone's left scratching their head. However, with that said, you have the biggest players in the industry all here spending that money, all of them with lots of cash in order to do so. So we are going to start to see, in my opinion, over the next year, you are going to see a lot more developments happen there. And when you have a company like Nvidia, which obviously reports next week, I think the one thing many of us will be looking for in that is, do we still see overwhelming demand? I believe was the term, perhaps I'm paraphrasing a little bit, from their CEO in terms of what they are seeing. And all what the stocks are showing us right now is that seems to be the case overall.
Yeah, it's interesting because you say that the bulls are back when it comes to Nvidia, but the stock is down about 0.3% year to date. What is the bull case for the company?
Well, I think if you look a little bit more, though, and you say, okay, what happened with DeepSeek? Here's a stock that's made back just about 90% of what that DeepSeek news was in terms of a threat overall. And so, again, I think also, when you head into such a big earnings, which they have now become, people may be a little bit more reluctant until it's a little bit of the show me case now in terms of what they will come out with next week. As I look at the options market here, we're pricing in about a 7 to a 7.5% move on those earnings numbers. So I think that also maybe have people holding back a little bit more. And so, in general, there is a lot to be excited about. And also the fact that if you look in 2024, this was a firm that in their fiscal year beat earnings on all 4 reports in terms of expectations. So I think that is also something that people have to look at.
Large IT companies are putting a lot of money into artificial intelligence, AI. In order to facilitate the training of sophisticated AI models and their cloud deployment, Microsoft has revealed intentions to invest $80 billion this year in the construction of AI data centers. With up to $65 billion set aside for AI infrastructure in 2025, Meta Platforms is doing the same. Amazon has increased its capital investment estimate to $100 billion for the year in an attempt to stay competitive. However, not all of that money will be used to build AI computer capability. Last but not least, a large portion of Alphabet's $75 billion capital expenditure forecast for 2025 was devoted to AI. In addition to all of this expenditure, the European Union plans to raise €200 billion, $209 billion for AI projects, while the Trump administration's Stargate initiative calls for an additional $500 billion in AI expenditures over the following 4 years. In summary, massive sums of money are being spent quickly on AI data centers and the hardware required to train and execute strong AI models, especially NVIDIA graphics processing units, GPUs. As businesses and governments continue to spend heavily on AI, demand for NVIDIA's data center GPUs is expected to stay high for the foreseeable future. What follows? Whether demand for AI processing capacity increases to keep up with the rapidly growing supply will determine this. Investors in Nvidia should take note of something odd that Microsoft CEO Satya Nadella said in a recent interview. Microsoft is spending a lot of money on AI computer power, but Nadella basically foresaw an excess in the coming years. Instead of building out more capacity on its own, the corporation intends to lease a large amount of capacity in 2027 and 2028. I say, this is fantastic, after looking at the builds. With all of the compute build, the only thing that will occur is a decrease in pricing. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Seek risk has not been appropriately priced into this stock because it seemed like it was a big deal and then all of a sudden it wasn't. We're getting some headlines today that they're reportedly seeking some outside funding. So what do you make of how investors have digested the DeepSeek news?
Well, I think that it's, again, sometimes the news from China can be a little bit tough to figure out in terms of the accounting. I think what I would say is that, if you look at what portion of development, when they said they did this for, I think it was $26 million, what part of the development are you talking about? You're talking beginning to end, and everything we're starting to see says, well, maybe not beginning to end, but maybe at the end processing, et cetera. So I think that there is what people have done is say, hold on, let's compare apples to apples compared to apples to the very small slice of an apple. And so that is why I think there remain some questions. However, I do think the real positive that came out of this overall was perhaps we as a country and maybe the tech industry had a little bit of sense of, I don't want to use the word arrogance, but we are superior and nobody can ever catch us. And so I think with this, it has been a bit of a wake-up call, which usually serves as a really good thing in business for people to say, hey, others are out there and they're going to compete just as hard. So you have to be sharp in your game the entire time. And that overall tends to be a good thing. And I think for Nvidia, we're seeing with how the stock has responded back positively, it has been a good thing overall, and the continued rally in the chip and the sort of more full sector plays that you get with.
A bubble may develop as a result of excessive investment. Governments and businesses are autonomously expanding vast amounts of AI processing capacity without having a clear vision of what demand will be like in a few years. After this present build-out is finished, it won't take much error for supply to significantly outpace demand. The railroad bubble of the late 1800s is the closest historical parallel to contemporary AI spending frenzy, not the dot-com bubble. Building expanding railroad capacity required far too much capital, resulting in a massive excess that drove railroads into bankruptcy and contributed to a financial crisis. Similar to artificial intelligence, the railroad was a game-changing technology, but investors were unconvinced. In the event of an overstock, AI computing costs will skyrocket. That's awful for those who possess AI computer power and fantastic for those who rent it. Theoretically, demand may increase as AI computing becomes more affordable. This impact does have a limit, though. When there were too many railroads, individuals didn't travel farther or ship more cargo to keep up with the demand. After all, trees don't grow to the sky. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Me now with a closer look. Hey, Josh.
Hey, Julie. Yes. So we are looking at the companies that Nvidia either bought more shares in the last quarter or sold some shares in. And what I think the key sort of takeaway here is AI euphoria is still in this stock market. People are looking to chase some AI trades if they think that it has not been fully priced in and investors haven't really piled in yet. So Nvidia bought shares of WeRide, which is a Chinese autonomous driving company. That company's stock almost doubled earlier this morning. You can see it came down a little bit here. This is about as of 12:30 this afternoon. Now, Nvidia also sold shares in SoundHound and sold shares in Serve Robotics. Those companies saw their stocks fall about 30%, but it sort of raises an interesting question for investors, which is we used to chase maybe what Warren Buffett was buying or what another famous investor is buying. Should we now be chasing what Nvidia and Jensen Huang are buying because of how good they've been at AI? We asked Tom Sosnoff, the Tasty Live founder and CEO, that question earlier today. Let's take a listen to what he had to say.
But for me, the opportunity would be to, that's a classic buy the rumor, sell the news. And I think in those cases, when you see a stock that shoots up on somebody else's news and you have to kind of wonder about the integrity of that news, then I think it's much more of an opportunity to sell into it than it is to buy into it.
So Sosnoff laying out there that he doesn't really think trying to chase this SEC filing that Nvidia filed, and it actually tells us what stocks that they owned several weeks ago, not what stocks they own today. So in theory, the company could have moved those shares, Julie, in the last couple of weeks. And so we don't even really know exactly what the holdings are at this precise moment. and perhaps the overall investor takeaway just being a 13F filing is a little bit of yesterday's news to be chasing tomorrow's trade, but at least shareholders of WeRide had a pretty solid trading session today.
Yes.
The overabundance of AI is a double whammy for Nvidia. Demand for its potent data center GPUs would plummet, and the price would also be under pressure. If AI computer capacity is oversupplied, demand will primarily come from upkeep of current infrastructure rather than growth. Another issue is that more and more tech behemoths are creating their own AI processors. According to reports, OpenAI is the most recent to join the trend in an effort to lessen its reliance on Nvidia. Whether demand for AI processing capacity can increase sufficiently to handle the massive supply coming online over the next few years is the trillion-dollar question. The future of Nvidia's stock is in jeopardy. When it comes to investing in AI, Microsoft is acting wisely. The business is still expanding its capacity, but it is being cautious not to go overboard. Microsoft is removing a significant amount of risk by preparing to lease a large amount of capacity in the future. It's difficult to see how Nvidia's sales and profit can increase quickly enough to support a multi-trillion-dollar valuation if Nadella is correct about the overabundance of AI. With AI investments exploding, the GPU leader may have a bright future ahead of them, but the long-term outlook is less certain. The stock of Nvidia will eventually face significant pressure if we are indeed seeing a big cycle of AI overinvestment. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.